What if the greatest heists don't use guns, but algorithms? What if the most valuable gold isn't in vaults, but in databases? And what if the 2008 crash wasn't a collapse, but a rehearsal? This is Divergence Point. In 2008, the world watched in disbelief as banks collapsed, pensions evaporated, and families lost their homes overnight. We were told it was a financial crisis, a perfect storm of greed, negligence, and bad luck. But what if that story was just a cover? What if 2008 wasn't an accident, but a dress rehearsal for something far more precise, far more silent, and far more profitable? Fast forward to 2026. Global markets are more digital than ever. Physical assets, gold, oil, real estate, are now represented by paper promises, ETFs, futures contracts, digital certificates. These aren't gold. They're claims on gold. And as long as everyone believes the claim is backed by reality, the system holds. But here's the uncomfortable truth. There isn't enough physical gold in the world to back all the paper gold being traded, not even close. Estimates suggest that for every 1 ounce of real gold, there are 50 to 100 ounces of paper gold in circulation. It's a house of cards built on trust. And trust can be hacked. Enter RX Capital, a powerful, low-profile investment firm with deep ties to global commodity exchanges. On the surface, they're just another player in the gold market. But behind closed doors, they saw an opportunity, not to trade gold, but to engineer its perceived scarcity. Their plan had 3 phases: silent, surgical, and nearly untraceable. Phase 1, the data heist. Orex didn't hire thieves. They hired data sculptors, elite hackers who didn't steal information but reshaped it. Over 6 months, they infiltrated the back-end systems of 3 major gold clearinghouses. Their target? The audit logs that track physical reserves. They didn't delete data, they edited it. In small, randomized increments, they reduced reported physical holdings by 33%. Not enough to trigger automated alarms, just enough to create a quiet, invisible gap between what the world thought existed and what actually did. Phase 2, the narrative bomb. With the data subtly corrupted, Oryx activated its second weapon, perception. Using networks of AI-generated social media accounts, paid financial influencers, and even fake whistleblower leaks, they seeded one message across the internet. Paper gold is a lie. The vaults are empty. Only physical gold has real value. The message spread like wildfire. Forums lit up, YouTube videos went viral, even mainstream financial news began quoting anonymous sources warning of a gold shortfall. Panic doesn't need proof. It only needs repetition. Then came the masterstroke. An independent AI analytics firm, quietly funded by Orex, released a report titled The Illusion of Gold, a systemic risk analysis. Using the altered data, their algorithm proved that global gold reserves were critically insufficient. The media treated it as gospel. Central banks issued cautious statements. Retail investors, ordinary people who trusted the system, began to panic. And in that panic, Orex Capital stepped in as the hero. "We stand with the people," their CEO declared in a carefully staged press conference. "We will buy your paper gold at fair market value, while others abandon you." Of course, fair market value was 30% of what it was worth a week earlier. Thousands sold in desperation. Retirees, small traders, even local banks all liquidated their holdings. RX bought it all. Quietly, legally, completely. Then the truth began to surface. Regulators noticed inconsistencies in reserve reports. An internal auditor at one exchange found the tampering. Investigators traced the hack to a server in Eastern Europe, but the trail ended there. The hackers? Ghosts. No names, no faces, just digital footprints that led nowhere. Oryx held more press conferences. "We were victims too," they said. "Our systems were compromised. We're cooperating fully with authorities to recover the lost value." Of course, fair market value was 30% of what it was worth a week earlier. Thousands sold in desperation. Retirees, small traders, even local banks all liquidated their holdings. RX bought it all. Quietly, legally, completely. Then the truth began to surface. Regulators noticed inconsistencies in reserve reports. An internal auditor at one exchange found the tampering. Investigators traced the hack to a server in Eastern Europe, but the trail ended there. The hackers? Ghosts. No names, no faces, just digital footprints that led nowhere. Oryx held more press conferences. "We were victims too," they said. "Our systems were compromised. We're cooperating fully with authorities to recover the lost value." And because they now legally owned the paper assets, they could claim future delivery rights from gold producers, even though the original backing never existed. The system didn't punish them, it rewarded them with unprecedented market share. Now let's connect the dots to 2008. Back then, banks sold toxic mortgage-backed securities, rated them as safe, then bet against them. When the bubble burst, they were bailed out with public money, while millions lost everything. This time, no bailout was needed. Adorex didn't just survive the crash, they designed it. So here's the real question. Is this just a story, or is it already happening in a market near you? Because in the age of AI, deep fakes, and algorithmic trading, the most dangerous weapon isn't a gun, it's a lie that looks like data. And the scariest part, you won't know it's stolen until it's already gone. This is Divergence Point, where the truth is the first asset to disappear. The questions we explore here at Divergence Point are complex, but they are the ones that will define our future. If you believe this conversation is important and want to be part of a community that isn't afraid to ask the big what ifs, then consider subscribing to our channel. Activate the notification bell so you never miss the next divergence point in our journey. We have so much more to explore together. Until next time, stay curious, stay critical, and take care.